afternoon, everyone, and welcome to this webinar on the JobKeeper legislation, which has been exclusively designed for the family daycare educators and the relevant industry. My name is Dinesh Aggarwal. I'm the Managing Director of Fortuna Advisory Group and will be the host and co-panelist for today's webinar. I have with me my co-panelist, Stephen Gethin from Fortuna Legal, who will be covering part of the presentation with myself. Um, as most of the attendees would know, that this webinar for today has been exclusively designed for the family daycare educators industry so that we can answer as much of their questions and the issues they are facing with the challenges of not being able to clearly understand how the JobKeeper legislation will work for all those benefits. So just quickly, a very quick disclaimer that the information presented in today's webinar is general in nature and does not take into account any of your personal situation. You should consider whether the information is appropriate to your needs, and where appropriate, please seek professional advice. I'd like to quickly introduce the panelists for today. So I'll just briefly tell you about myself. As I said, my name is Dinesh Aggarwal. I'm the founder of Managing Director of Fortuna Advisory Group. I've been recognized amongst the top 3 SME tax advisors in 2015 by the Tax Institute of Australia. With 20 years of experience in accounting, finance, and business management in the top corporate positions, both in Australia and overseas, and have worked with the clients internationally, and I manage a lot of international clients and a lot of SMEs and small businesses and the high net worth individuals here in Australia. I'd like to introduce Stephen Gethin. Stephen specializes in tax, business, property, and self-managed superannuation law, has over 16 years of experience in major law firms and international ASX listed companies, and he excels in structuring and documenting complex transactions, particularly where a lot of challenging tax issues are involved. Just a little bit quickly about Fortuna Advisory Group. We are a multi-service accounting practice based here in Perth, specializing in tax and business advisory solutions, financial planning, mortgage broking, and legal services. At Fortuna, we create business solutions for business owners and the businesses to achieve the desired outcomes they deserve. So Fortuna has also been awarded as the best multi-service firm of the year by the Australian Accounting Awards in 2019. All right, so I'll hand it over to Steve to start the presentation. And the structure of the presentation would be that for the first about 20 minutes or so, we would like to give you a high-level overview of how the legislation works, some key aspects of the legislation in terms of the eligibility criteria, how the businesses have to participate, the ones who have employees, ones who don't have employees, who are operating as sole traders, or in various operating structures. And then we'll get straight into the questions and answers. We've got about over 300 attendees expected joining the webinar today, and all from the family daycare industry. And we have received heaps of questions in the last couple of days. And we have made our best efforts to summarize most of the issues addressed in those questions, and we'll try to answer as many of those questions today. Now, if anyone has any other questions, please feel free to share your comments in the chat box, and we'll see if we have enough time to address any questions outside of what we've already received for our presentation today. So hand over to Steve. Steve, I'll stop my screen and hand it over to you to share your screen. Steve, you're on mute.
Beg your pardon. This is an overview of the eligibility criteria for an employer to claim JobKeeper for employees, and later we'll come to the criteria for sole traders to claim JobKeeper for themselves. Each of these points I'm about to give is requires to be drilled down into in a little more detail, and we'll come to that in subsequent slides. So the first criteria is that on 1 March 2020, you carried on a business in Australia, or were a non-profit body that pursued objectives mainly in Australia. You satisfy the turnover decline test. That's the 30% reduction in turnover year on year, and we will drill right down into that. The employee satisfies a number of eligibility criteria for the relevant fortnight. JobKeeper is broken up, the whole JobKeeper scheme lasts 6 months, and it's broken up into a series of fortnights, which we'll call a JobKeeper fortnight, and the first of those fortnights began on the 30th of March. So, and you need, each of your employees needs to be eligible for each of those fortnights, according to some criteria, which we'll break down in detail. You need to lodge an election to participate in JobKeeper with ATO, and we'll show you how to do that. Each month, you need to give ATO within 7 days after the end of the month certain financial information. You can only, an employee can only get one JobKeeper payment through one employer. So if they've got multiple jobs, they'll just need to pick one of them. And the employer must not be in a category of entities deemed ineligible, and they're mainly government bodies, nothing that would concern anyone in this virtual presentation. Your time for electing to participate, the first 2 JobKeeper fortnights, which end on the 26th of April, you need to register on or before 26 April. Now, many of you may have already submitted an expression of interest with ATO, and they will then get back to you. You're now in their system, and you will be given a link when the form goes live for you to actually register, which will happen on Monday the 20th, next Monday. That's when you will log in and officially register, and in this presentation we'll tell you the main information that you're going to need to, and you've got sort of all of next week to do that, so you don't need to be in a rush and stressed out as to whether you can get that all fully understood and done by Monday. If for some reason you didn't register before the 26th of April, then you can't claim for those first 2 fortnights, and maybe your turnover hasn't quite, maybe your turnover's on a downward trajectory and you haven't quite qualified yet, and you're waiting for your turnover to drop a bit more, or for whatever reason some people just didn't hear about the scheme and are qualifying later. You'll only qualify for the fortnight in which you register. Once you've registered in a fortnight, you stay registered for the whole rest of the scheme, unless you opt out at a later date. ATO filing requirements, as briefly mentioned earlier in the first slide, you've got to file a monthly report. We don't know exactly what's in that yet. The ATO hasn't released the format of those, but in summary, it's going to be details of your actual turnover for the month just past and your estimate of what your turnover is going to be for the future month. And then you also need to give, if you include details about any particular employee in your monthly reporting to ATO, you need to give that employee details within a notice within 7 days, telling them that you gave some information about them to ATO. And again, we don't know what's in that notification. That's up to ATO to provide that. And they'll be releasing that over the next few days. So Dinesh, I'll hand over to you for an explanation of the key question, I suppose, the turnover decline test.
All right, thanks, Steve. So the main criteria in being eligible for the JobKeeper payment is that you should meet the turnover decline test. And the main aspects are the businesses have been divided into 3 major categories. Anyone who's below the turnover of $1 billion, which most of the attendees today is relevant all in the small business categories, they need to have a 30% decline in their turnover, and we'll explain how they have to compare and determine the 30% decline. Anyone above $1 billion, which is probably not relevant for this presentation, has to show a 50% decline, and any not-for-profit organizations which are registered charities will have to show a 15% decline. So for the turnover decline test, you need to uh, determine your decline in, you have to pick one fortnight in which you become eligible, and you need to make a determination that your projected sale either for the next 1 month or for the next 3 months, which is a quarter, that you will have a 30% decline or more in your turnover as compared to the similar period in the previous year, which is 2019. So, for example, if in this fortnight, which is for the period from 30th of March to 28th of April, there are two fortnights, and you project your turnover to be 30% less in the next 30 days or for the next 90 days, in comparison to the same period, which is April 2019, or the quarter ending June 19. If you project your sales will be 30% lower, then you would qualify for this. The other question that comes often is that should I use a month or a quarter as my turnover period? You can pick and choose whichever test you want to apply. You can pick a month or a quarter. If you think that your turnover is going to drop in the next 1 month, you can pick that, and based on that, you can register yourself as an eligible entity. And then once you become eligible, you stay eligible, but you might see that your next 30 days turnover might not have a 30% decline, but in the whole quarter, which is the next 3 months, you expect your turnover to be more than 30% decline, then you can choose the quarter and file your eligibility based on that. Must the turnover test period be the same as my BAS filing period? No, the rules don't require that, but generally, I mean, the question is that what is ATO going to compare? Normally, those who are filing their business activity statements, who are registered for GST, the ATO would have their basically turnover record through the business activities those that have been filed. There's going to be a lot of small businesses, especially amongst the attendees today, who are not in the category of the businesses who are registered for GST or who are filing BASs. Then basically it would be based on the turnover you declare in your in the form which has to be submitted with the JobKeeper submissions. So the next question is, should I be notifying the ATO what my turnover test period is? Yes, at the time of writing or registering with the JobKeeper payment, you probably just need to, we don't have the exact form yet. It starts from Monday, the 20th of April. But the legislation doesn't specify that you need to elect that. So most likely in the form, we will be seeing that whether you need to choose the month or the quarter, and the comparative period for that. All right, moving on to the criteria how to calculate your projected GST turnover. So again, all those attendees who are participating today, and they are in that category where they are registered for GST. So you need to calculate your projected GST turnover, as I explained, during a turnover test period, and which basically can be a month or a quarter. And you need to just pick one particular fortnight in that period. And if you're eligible for that, you need to qualify on that basis. Now, what type of sales that are included for the purpose of calculating the projected GST turnover? Basically, all type of GST supplies, except certain kinds of sales which are input text, and supplies that are not for consideration, and then the supplies which are made in a connection with an enterprise which you carry on. So the GST-free supply, the GST-free supplies, like which is medical practices, and also the childcare industry where your sales is GST free. It is still counted in the GST turnover for the purpose of this test as well. So just an example, to calculate a GST turnover for the month of April 2020, you will work out the value of your actual GST supply, which is your sales you have made up to and including 16th of April. Then you estimate the value of the GST supply you are likely to make from 17th to 30th of April. And the two amounts then will become your projected GST turnover for the month of April. How do I
just jump in there, Dinesh, to say that date of 16 April, that's of course if you were doing your calculation today. If you're doing it on the 20th, then obviously it'll be pretty similar because you won't have too many sales on the weekend. But yes, you'd use your actual turnover up to the day before you do the calculation, and then you're guesstimating your turnover for the rest of the month from that date up until the end of the month.
Yeah, thanks, Steve. And how do I estimate my future turnover? Now, basically, you have to do a projection. So all the businesses, based on their current circumstances, they will have to estimate how much sales they will make in the next 30 days or in the next 90 days. And you will have to make a reasonable estimate based on certain factual information which you have. The ATO is basically, if they have to come and verify, they would basically be looking at what sort of factors you considered, or what was the reasonableness of the estimates you made for the purpose of projecting your turnover, and go on that basis. So now, will I have to refund the JobKeeper payments if I get my projections turnover wrong? No, that's not the requirement of the law. You need to determine your eligibility in the fortnight for which you are projecting your sales for the next 1 month or the quarter. And if you think you're eligible, you will register for the JobKeeper payment. And once you are registered, and you are eligible, you stay eligible unless there is no requirement at the moment in the JobKeeper legislation that you have to withdraw. It is possible that your turnover later on, your actual turnover, doesn't actually turns out to be 30%, show the 30% decline, or is actually more compared to what you projected, but it doesn't disqualify you from continuing to receive the JobKeeper payment. How often must I check whether I meet the turnover decline test? So as per the forms, there is, as for the JobKeeper registration, there's going to be a monthly reporting requirement where you have to continue to supply your monthly sales figures along with those who have employees. They have to also report whether their employees continue to be eligible on a monthly basis. Alternative turnover decline test for startups. Now, there's going to be a lot of businesses, and we've got some questions in this context as well, which we'll be covering later on, is that there are a lot of businesses who started in the last 12 months or basically had a growth in the last 12 months, but now because of COVID, suddenly there is a decline. So those businesses would still be eligible, but there is a process for them. They have to apply to the commissioner to determine their eligibility. Our expectation is that if there are genuine reasons and you can substantiate that, the commissioner will consider that you are eligible under the alternative decline test. So hand it over to Steve again for the next slide.
Thank you, Dinesh. I'm not able to share my screen at present.
So I think, Steve, maybe just continue. I've got the screens up on the next slide.
Okay, so I just noticed a question came in through the chat, and someone pointed out that family daycare centres don't pay GST, and that is correct. When we use the expression GST turnover, it's a technical expression. We should probably clarify that for you. It just means turnover within the GST system, and the government regards all that as GST turnover, even though your particular supplies are GST free. So don't be too confused by that. Whatever amount your turnover. Another question was, well, we don't necessarily think about our money coming in terms of turnover like maybe a larger business would. For these purposes, your turnover simply means the gross amount of payments that you receive, whether they come via the contributions from parents or whether they are the government subsidy component. All of that added up together for any month or any quarter is your turnover, and that's what you're comparing. You're comparing those amounts for those total amounts for April 2020 versus April 2019, or the June quarter 2020 versus the June quarter 2019. Whatever you think you need to compare to get yourself the biggest decline in turnover or revenue, we'll call it.
Thanks, Steve, for clarifying. As you rightly said, I think the simplified form of the turnover or the GST turnover in this criteria would be the gross receipts. So basically all the money or the fees FDC educators collect from their service provider or through the parent. So, so basically for this purposes, we can go by just the gross receipts. I mean, those a lot of, just another point to add there is that if you don't charge GST, this is because the childcare service is categorized as GST free. It doesn't mean that you don't have a requirement to register for GST. There's a lot of businesses where their supply or their sales or the collections they make are GST free, but if their turnover is more than $75,000, as per the rules, they need to have an ABN and they need to register for GST. And we'll cover that question, which has been asked on a frequent basis by the FTC educators in our FAQ section later on. Steve.
Yes, thank you, Dinesh. So another good point has come through that it's true that you don't pay GST on your fees, but there is GST if you're buying inputs. There's GST in those inputs. So anyone that's conducting a family daycare centre, even if their revenue is very low, there is actually an advantage to them in registering for GST, even though they're not required to if their turnover is under $75,000 per year, because registering for GST, one, won't make you liable to pay any GST because your supplies are GST free, but what it will allow you to do is to claim a refund of the GST that's built into those supplies that you use in the course of your business. So anyone who's not registered may wish to think about getting registered to get those input tax credits, those refunds of GST that you're currently paying when you buy goods for and services for your business. So moving back to the slides in front of us, employee eligibility criteria. Now I understand, and people can correct me if I'm wrong through the chat perhaps, but I imagine that many family daycare businesses probably don't actually have employees, although again, I suppose it's theoretically possible that some of you may have at least part-time or casual assistants who might do some things, I'm not sure, help out or give you some time off. Just in case anyone does have employees, or maybe they're also part of another business, or there's another business in the family that has these same questions. So the person must be an employee, must have been an employee at the 1st of March. If you had to lay them off, you're allowed to re-employ them and they'll still be included as long as they were employed at 1st of March. They need to have been age 16 or over at 1st of March. They need to either be a normal employee, in other words, a full-time or part-time employee who's not a casual, or if they are a casual, they need to be what's called a long-term casual. A long-term casual, we'll come to that in a little bit more detail later on. They also need to be either an Australian citizen or an Australian permanent resident, or they need to be on the only other visa is a 444 visa, and that's basically confined to New Zealanders. So any of the people who are over here on labour visas, should there be any of those working in the sector, unfortunately do not qualify. There's various other circumstances which make an employee ineligible, such as receiving government paid parental leave or dad and partner pay under the government paid parental leave scheme, or they've been injured at work, totally incapacitated and receiving workers' compensation. If you happen to take over a business, and it had employees as at 1 March, then the new owner of the business is counted as if it still actually had those employees on 1 March. So if you, each month, at the end of each month, you're notifying ATO of who you're claiming JobKeeper for that month. So if an employee leaves during that month and you claim for them last month, well, then next month, at the end of that month, when you're filing your monthly report, you need to specify who is still working for you that you're claiming JobKeeper for. Unfortunately, if someone leaves and you get a new employee, there's no ability to claim JobKeeper for that new employee because they weren't working for you at 1st of March. That's probably an oversight by the government. They may possibly fix that, although we don't think there's a lot of scope for them to fix very much in this because they've got a lot. There are a few mistakes in this. It was done quickly under pressure. It's a pretty good scheme, but it's not perfect. And we're not necessarily expecting them to iron out every wrinkle that we can all quite easily think of. Now, meaning of a long-term casual employee, as people would have heard, a fair bit of discussion about that. That means they have to have been not only a casual for 12 months, but during that period, they have to have had regular and systematic employment. Now, that doesn't mean that they have to work, the same hours each week. It just means that they get, an ongoing reasonable flow of work during that 12 months. So, their hours can actually be quite irregular and they can still be described as a regular casual as long as it's a very hard test to be exact about. And if anyone's in any doubt, if they give us a call, we can give them a very quick opinion on whether someone is or is not likely to be treated as a regular systematic casual. Some businesses have personnel that do work that they decide for whatever reason, so as not to have to pay super or workers' compensation, let's call them an independent contractor. Now, if you've got someone who's a genuine independent contractor, you can't claim JobKeeper for them, but they can probably claim it themselves as a sole trader. Some people have someone who really is actually an employee and they call them an independent contractor. Calling someone an independent contractor doesn't make them an independent contractor. But having said that, if you've had someone around for a while as an independent contractor, you haven't been taking out PAYG out of their wages and paying it to the ATO, then you suddenly think, hey, they're really an employee because they're doing work in the same way that an employee does. So the law and the tax office say that is actually an employee. If you were to try and change it now, you could, but you would run into difficulties in that ATO would say, well, okay, you should have been taking out PAYG for this person's wages for the last year or whatever it is. Now you owe us all that money. So you've got a bit of an issue if that's your situation, and you probably need to regularise that at some point, quite apart from JobKeeper. Next slide, please. And that's back to yourself, Dinesh.
Okay, so now we have to, this is again still, relevant to where people have, the employees, and there's a lot of people in the attendees who might not be in that category. So we'll try to skim that through very quickly. So you need to satisfy the wage condition in respect of an eligible employee for a fortnight if the following amount equals or exceeds $1,500, so which is basically their normal salary, wages, commission, bonus, etc. So if the amount you withhold from the payments made to the eligible employees for each fortnight. So this generally need to meet the normal wage condition. And where eligible employee is not paid wages fortnight, they're like paid on a monthly, then the monthly payments are attributed to the fortnight on a fair basis. The commissioner also has a discretion to treat a particular event that happened in that fortnight as having happened in a different fortnight if it's reasonable to do so in their opinion. So now coming to the next slide, which is important for a lot of attendees today, is the eligible business participants. Now, this is where a lot of businesses who are operating as self-employed, and they could be structured in few different ways. They could be operating as a sole trader, or they could be operating in a partnership or in a family trust or in a company. So all those who are structured in different sort of business structure forms, starting from a sole trader to company trust, but they're all operating as self-employed and not an employer. They don't have the employees, they're just working for themselves, running a business, will fall in this eligible business participant category. So they're not left out, they're still eligible, but there's a different way to claim for them. So So those who in that category will be applying for the JobKeeper payment if for a particular fortnight as well, and they should be not in a category of a not-for-profit, and the eligible business participant would also qualify and claim in the same way as it is in relation to an eligible employee. And the criteria is the same, that you need to have an ABN on 12th of March to be able to eligible. So that particular eligible business participant, which is a self-employed business, needs to have an ABN on 12th of March. They should have included their income, which is the money they collect from, or the gross receipts they collect from providing their service. They should have included that in their assessable income or their tax return for 2018 and 19. Now that has the criteria is that the commissioner needs to see that they have disclosed that in their 18-19 tax return before 12th of March. But a lot of businesses or those self-employed don't have a requirement to file the tax return by 12 March. The due date is 15th of May 2020. A lot of them might not have filed it. Then in that instance, you have to look at an alternate test, which is you've made a taxable supply in a period started 30th of June and ended before 12th of March 2020, which means that if you're filing your business activity statement and if you are GST registered, then you should be able to disclose that through the business activity statement. But it appears that there could be a lot of the FTC educators here who are not registered for GST. In that case, I mean, if they file a tax return after 12th of March 2020, before the due date, they should be able to satisfy the commissioner that they have met that test. I think, Steve, it's over to you now.
Thank you, Dinesh. So only one eligible business participant is allowed to claim JobKeeper per business. So again, with family daycare centres, I would imagine often they are small businesses just run by a single person. So that shouldn't be a challenge for too many. If by any chance any of you are running a business like that as a partnership between a husband and wife or domestic partners, then only one of them is entitled to that $1,500 payment. So I mean, and quite possibly in that case, one of them may have another job elsewhere. So in that case, that person would be entitled to claim JobKeeper through their other job elsewhere, assuming that their employer has got a 30% drop in turnover, and that could leave the one whose sole source of income comes from the daycare centre business to then claim for themselves as what's called a business participant. So they're not an employee, but they're similar to an employee. They're a working business owner. So they're more or less treated the same way as employees. And again, if you're claiming as a business participant through your own business and you've got a part-time job somewhere else, you can't get JobKeeper through that other employer. So to be a business participant that can claim JobKeeper, a sole trader, you need to, on the 1st of March, pretty similar for an employee, on the 1st of March, you need to have been actively engaged in the business. Even though the business only needs an ABN for some reason from 12th of March, you still need to have been working in it from the 1st of March. And obviously most businesses will satisfy that. It's only very new. Anyone who started up since 1 March is not going to satisfy that test. Need to be above 16, which I imagine everyone is. And again, same residence or citizenship category as for employees. Next slide. And that's back to you, Dinesh.
All right. So the next question is that when and what must I report to ATO? The employer must give the ATO a notice within 7 days of the end of each calendar month in which any fortnight for which they are going to be claiming a JobKeeper payment, and that is defined as the reporting month. So once you're registered based on your eligibility, you have a requirement to report every month to the ATO, which will be on a particular form that will be released. And you need to provide the numbers for your current GST turnover for that particular month and the projected turnover for the following month if you continue to stay eligible. Now, as we mentioned earlier, that if your turnover is more than what you projected to be, doesn't mean that you will become ineligible. But the ATO can come and ask you that whether what was the basis on which you originally projected your turnover. And the form to be filed on a fortnightly basis. The forms will be available on the ATO from 20th of April. Now, what happens if my current turnover report fails the turnover decline test? That I've just explained that once you're eligible, but you have to continue to provide that data to ATO on a monthly basis. That what's your current and projected turnover. But the ATO just needs to be satisfied that you had a reasonable basis to estimate your turnover when you registered yourself. When will I be notified if my JobKeeper application is successful? ATO will give you a notice whether it accepts your election to participate. And for the JobKeeper payments after the first payment, if ATO accepts your ongoing eligibility, it will simply keep paying you on a monthly basis, and you get paid every month in arrears. And you will get a notice from the ATO only if your ongoing claim has been rejected. Otherwise, you will continue to get the payment. And if the commissioner rejects your application on an unfair basis, yes, you have the right to have that decision reviewed by filing an objection against that decision. When are the JobKeeper payments made? The JobKeeper payments will be made starting from 1 May onwards for the April period, and thereafter within 14 days from the end of the month for that particular eligibility period. So it will be paid in arrears every month within 14 days. So I think back to you, Steve.
Thank you, Dinesh. So the JobKeeper scheme runs for 6 months. The end of the last JobKeeper fortnight is the 27th of September. So as Dinesh was alluding to, if you qualify once because your turnover for April or the June quarter is down by 30%, then it actually doesn't matter if your turnover then increases. We come out of this COVID pandemic in a month or two and your turnover increases such that you're no longer 30% below what you were last year. That doesn't matter because you did qualify at one point. You stay qualified for the whole 6 months. Things are much worse than we're probably expecting and the economy is still in the doldrums. In September, the government could extend the scheme, although because of the enormous amount that it costs, we think it's fairly unlikely that there will be any extension. Now, if you do have employees, when JobKeeper ends, then you've got a decision to make. I mean, hopefully your business has recovered to the extent where you're back to your normal cash flow. You can pay them, then put them back on their normal salary. You may not have enough work for them to do at that point, but you've still got some work for them to do. Then you can go through a redundancy process. You can make them redundant from their full-time job and offer them as part of the redundancy process a new part-time position, which they may or may not accept. You can't just tell an employee, look, there's not enough work for you, we're going to cut your hours, because that's taken as a dismissal from their full-time job or from whatever their current hours are and an offer to re-employ. You've got to go through a formal process of making them redundant from the position with whatever their current number of hours are. And in that process, you've got to, if there's an alternative job they could do, even if it's got lesser hours, you've got to offer it to them, and that's all got to be documented so that otherwise, if someone is redundant but you don't follow a few basic steps, then the employee can claim unfair dismissal. Or, in the worst case scenario, there's just your business just hasn't recovered or hasn't recovered to the stage where you need that assistant. So you then just make them redundant and bid them farewell, sadly. Dinesh, I think it's back to yourself regarding these items.
Okay, so the next item is that, do I need to withhold PAYG from a JobKeeper payment paid to an employee? Yes, it works as exactly the same as the payment of a wage. So as you have a requirement to withhold tax, or called PAYG withholding, from the wages paid to the employee. Similarly, when you make a payment against the JobKeeper payment, it's treated as normal wages, and you have to withhold PAYG and remit it to ATO. Now, do I withhold PAYG from a JobKeeper payment made to a business participant? Yes, if the business participant is also an employee, which is, let's say, in an example of a company or a family trust, if that the business owner is as a director or as a trustee, they are also an employee of that entity and they're paying as a wage, they would have to withhold PAYG. But if it is a sole trader or they just withdraw normal drawings from the business, like in a family trust or a company, they don't take a salary, then there is no requirement to withhold PAYG, but they will have to pay their own separate taxes, and they could have a pay as you go taxed installment, which is different to PAYG withholding on the wage. So they might have to pay their own tax installments based on as the ATO determines based on their income. So the next item is the JobKeeper paid to my business an assessable income of my business, which is the money which you will receive from ATO as your JobKeeper payment? Would that become your taxable income? Yes, it would. It would normally it would be treated as your normal income, and it would has to be disclosed in your tax return as your assessable income. Does the GST apply to the JobKeeper payment? No, so there will not be any GST charged on the JobKeeper payment. So the ATO will not pay you $1,500 plus 10% as GST. If you're registered for GST or you're not, doesn't really matter. There's no GST applicable on that. Do I pay a JobKeeper received for a business participant to that person? No. So in case of a business participant, so that's where it differentiates from an employer and an employee. So when you receive a JobKeeper payment for an employee, you have to make a payment to the employee, or you adjust it against the wages you're already paying because it's a reimbursement. But when you get a JobKeeper payment as a business participant, as a business owner, or a self-employed, or a sole trader, then you don't have to pay that to that particular person. It is their own discretion how they want to use that money. They can use that to pay their other expenses of the business, or they can pay themselves. They can decide how they want to use that money. Are the JobKeeper payment wages for payroll tax purposes? This is a subjective question and will depend on the laws of each state and territory. We probably will not go into that category because it's not going to be applicable for the attendees here because the basic thresholds for payroll tax are quite high. Steve, back to you.
Thank you, Dinesh. So the question of questions come up in the chat, which was that the government is reducing the payments to people providing the service that our audience provides, which is quite unfortunate, actually. We were quite surprised to hear that. Yes, that's exactly the sort of thing that could qualify you for JobKeeper, because as we said, those payments that are coming to you, whether they're coming out of the pockets of the parents or whether they're coming from the previous government subsidy, that is what's your turnover for the purposes of JobKeeper. So if the government reduces that payment, then that is a reduction in your turnover. So that is certainly something that could be used to see whether you qualify. And by the sound of it, it might well make it very easy for the great majority, if not all of you, to qualify. Obviously, you need to check your particular figures, but if they're providing, I think it's 80% of your income, they're cutting that by 50%, then there's a 40% cut in your turnover right there. And that's before you take into account maybe some parents, because they're not at work, they're not sending their child to daycare anymore. And the other question someone asked is, because there's the scheme that takes money out, collects money for you and takes some out, how is that payment to the scheme, how is that taken into account? Where there's a body like that, it depends. If the money went to you first and you had to pay them, the total gross amount you receive is your turnover. If they get the money first and they only pay some to you, then it's the amount that you receive from them is your turnover, or that's included in your turnover. Now, coming to superannuation, if you're paying employees, do you have to pay superannuation on JobKeeper payments? Some employees are receiving currently less than $1,500 per fortnight. And the JobKeeper scheme says, as you would have heard, that if any employee, their ordinary wage is less than $1,500, they actually get a pay rise up to $1,500 per fortnight. Now, just to keep it easy, keep the maths easy, supposing there was an employee on $1,000 a fortnight before JobKeeper, you now have to pay them $1,500 a fortnight to get JobKeeper. You still have to pay them super on their $1,000, but the other top-up payment, the other $500 that you pay to top them up to $1,500, you don't have to pay super on that. If they were earning more than $1,500, then you can either keep paying them their previous wage if you can afford to, or you can put them on what's called a JobKeeper stand-down notice. And you give them a notice saying, okay, we don't have enough work for you to do to pay you your previous wage. We're going to reduce your wage to $1,500. You also have to reduce their hours proportionately. You have to keep them on the same hourly rate. But if you've reduced them down to $1,500 by using one of those notices, you've got to pay them superannuation on the full $1,500, but it's not on top of the $1,500. So you can use that $1,500 to pay them a wage of, whatever it is, $1,420, and the rest as super, so that it's $1,500 total out of your pocket. And in fact, they won't even be getting that full $1,500. You'll be taking some of that out and paying it to the government. But again, that's not on top of the $1,500, that's out of $1,500. So that's taken us all the way through the overview. We've many people have in advance kindly sent us in some of their questions, and we've got those all listed here. So we'll take you through those. And Dinesh, back to you to lead that off.
All right, so just a couple of other questions that has come in the chat. One was that, can I still claim my expenses against the JobKeeper payment? Yes, the JobKeeper payment will be treated as your normal assessable income. So any business expenses, which are legitimate tax deductible expenses, which you should be able to claim that normally against that income. So yes, your expenses are deductible. All right, so we're going to start off with some of the major questions which have been coming. So we're starting with the first main question. So which is regarding the ABN, and that's the I think a lot of attendees today have that issue that they don't have an ABN. So the question is, if you don't have an ABN, are you still eligible? The straight answer is yes. You would still be eligible if you don't have an ABN. The requirement as per the JobKeeper legislation is that you need to have an active ABN on 12th of March. But if you don't have an ABN, can you go back and register an ABN? Because if you were running a business, you must be actively running a business as on 1 March. And if you don't have an ABN, you can go back and register an ABN. If you were already running a business, then you can show from your records and from historical records that you have been conducting a business and had income earning from that business. If you are an employer with an employees, the criteria is a little bit different to the ones who are business participants as self-employed. There is the normal criteria is that if your turnover is more than $75,000, you're supposed to register for GST as a business, whether your sales are GST free or subject to GST. But if your turnover is less than $75,000, they don't need to have an ABN. But if you don't have an ABN, any customer making you a payment needs to withhold 47% from the payments made. So generally, everyone is aware that if they are running a business, they need to have an ABN so that they don't have to, part with 47% as the customers will have to withhold from them. And also, generally, when you report your income in your tax return under the business schedule, you normally need to disclose your ABN number in your tax return as well. And generally, the ATO will flag that if you don't have that mentioned there. So the next question we'll take up is I haven't, one of the questions which was raised was that I have an ABN. I had it prior to opening this particular business, which is the FDC, and it is not related to this business. Will this be accepted? The short answer is yes. An ABN is not tied to a particular business. It is only tied to a particular entity. So if you are a sole trader as a self-employed and you had an ABN in your personal name, that particular ABN would be valid and relevant and can be used for any business, and any income from any other businesses can be combined or would be combined if for GST purposes. If your combined income or your gross receipts from various businesses, if you're running as a sole trader, exceeds $75,000. You should have registered for GST. Now, if someone has significant sort of unreported income in a business, they need to rectify because they, of course, are building up a lot of liability for penalty and interest, which will keep getting worse with the time if you are not reporting that income through your tax returns. If they claim the JobKeeper for that particular business, then of course that will come to light straight away, because if you're showing a history of running a business, even as a childcare or a family daycare educator, and if you've not been reporting that income in your tax returns, and if you go to register for JobKeeper, you might be required to catch up with all the previous undisclosed income, and yeah, it could lead to some issues. But each of your circumstances could be different, so we would suggest that you take an advice. You can reach out to us for a consultation. We can look at your circumstances on an individual basis. If you are what needs to be done practically in your circumstances, if you have to go and register for JobKeeper payment, and whether you had or you didn't have an ABN for any particular reason. The next question, I'll pass it on to Steve, which the question is, I've grown my business and I'm earning more than I was last year at this time due to more enrollments. I had estimated that I would earn a particular amount with these enrollments, but now because of the reduction in what is being paid for a childcare, I'm earning much less than I had anticipated, but it is still more than the last year.
That's an excellent question. And now the turnover reduction test that we outlined earlier, that's what you'd call the basic test, which the majority of businesses are probably going to be complying with. The rules do say that the tax commissioner has power to develop a parallel test that can apply if for some reason comparing your turnover this month to the same month last year is not going to fairly represent how Corona has affected your business, then the tax commissioner has the power to develop one or more alternative tests. Now, a classic example is, before I come to the specific question, another classic example is obviously a business that has not been in business for 12 months. Just say a business has been in business for 9 months. Well, the first obvious point would be, well, let's take the first starting month. But even that might not be fair, because obviously in the first month, the business probably doesn't make that much. It's growing, it's getting the word out that it's there, and it may take a while. So those businesses will be able to go up to the tax office and say, look, it's not really fair to even compare my turnover this month to my turnover in my first month 9 months ago. Maybe my turnover has been growing steadily every month. Maybe we should just be comparing it to the last month that happened before Corona. And that would actually apply to this particular question. So they're not necessarily a startup, but they've been growing. They could well, when we see this new test, and we haven't seen it yet, the tax commissioner is yet to develop that. We do expect that they will be issuing it fairly shortly, because it will be needed for those businesses to register next week. So hopefully it will be out earlier rather than later next week. But if the tax commissioner takes a fair and reasonable approach, a business like the one in the question will be able to say, and give some evidence to say, look, my turnover was steadily growing, and then Corona came, and it's now dropped by 50% from what it was 2 months ago. I should be treated as satisfying the test, and we think there's a fair chance that those kind of businesses will be able to satisfy this new alternative test.
Thanks, Steve. So the next question is, I'm unsure whether I should apply for a JobKeeper or a job seeker. Now, I can answer that question. The JobKeeper payment is considerably more than what you would probably get under the job seeker, but it depends what your eligibility is. If you are eligible for JobKeeper under the various criteria we've discussed as a self-employed business participant or as an employer, you probably would sort of have JobKeeper as your first choice. But if you're not eligible for any payment under the JobKeeper, you have a choice to go under job seeker, but you can only have one or the other. So if you are eligible for JobKeeper, you will not fall under the eligibility of the job seeker. And if you are already have started availing the job seeker payments, then you will not be eligible for the JobKeeper unless you cancel your eligibility, or you cancel your registration with the Centrelink, and let's say you were a stand-down employee, you started going to the Centrelink for the job seeker payment, but then now after the JobKeeper, your employer asks you to come back again and they register you for JobKeeper, it's possible that you might be eligible for JobKeeper instead. So the next question we received was, what happens when my income fluctuates on a weekly or a fortnightly basis because of less or more enrollments? And do I need to report to the ATO or Centrelink each week or fortnight? I'll pass that on to you, Steve.
Thanks, Dinesh. Yes, so your business income may well fluctuate. You just need to get to the point at some point during the JobKeeper scheme to start becoming eligible for your turnover to be down by 30% for that month or that quarter. Once you've satisfied that test, and remember, it can be done on a projected basis. So if right now, next week in April, you think that on reasonable grounds that your turnover is going to be down for the rest of April by so much that the whole of April's turnover is down 30% on April last year, you've qualified. Now, if you have a great week in the last week of April and your turnover increases such that you're actually not 30% down for April, that doesn't matter, because as long as you used a reasonable basis when you predicted you would be down 30% for April, or maybe you do stay down under 30% for the whole of April, but then in May, your turnover picks back up, that doesn't matter. Once you've hit that turnover decline test, once you stay registered, you stay eligible for the whole rest of the 6 months.
Thanks, Steve. The next question we received was, does the government have any system in place where they link all the income information together to help collate all the relevant info for determining eligibility? And if so, is there any way on MyGov we can link the info together? Steve?
Yes, okay, so if you already filing BASs, as we've said with the turnover test, one key element of the turnover test is what is your projected turnover for the month in which you file your claim. So the government won't already have that information because that month is still unfolding. But when you have to compare that to the same month last year or the same quarter last year, if you've been filing BASs regularly over the past 12 months, then your turnover information for the month of April 2019 will already be in the ATO system. And we would expect, they often do this now, that when there's a form on their website you have to fill in, and you've got to include some information which you would have already given them, it should pre-populate with data you've previously lodged. For example, it's going to pre-populate with employee data from the single touch payroll system, we've been told. And we expect it should also pre-populate with your previous period earnings.
Thanks, Steve. The next question was when the money would start appearing in our bank accounts. I think we covered it earlier in the presentation that the ATO will start releasing the payments from 1 May onwards, and thereafter they will release the payments every month uh, within 14 days from the end of the month for which you're eligible. How often the payments will happen? Again, on a monthly basis within 14 days of the end of the month. Uh,
This does actually present a bit of a problem, Dinesh, which we should probably elaborate on. See, people had possibly hoped that this scheme would give you some money so that you can then pay an employee. Or again, maybe not a huge issue in the family daycare industry, as we understand that there's not a huge ratio of employees to business owners. But for anyone who does have any employee, the cash might be that tight that you would have really rather prefer to get the money from the government before you have to pay that person. Unfortunately, not how it works. You have to pay them and then the government pays you back. And if you don't pay them, you actually can't claim. If employees are on weekly or fortnightly pay, you can possibly restructure their pay cycle so that they're at least only paid monthly in arrears, and then hopefully you only have to pay them a day or two or a few days before the government actually pays you. So if you need advice about how to change someone's employment conditions, give us a call. We can help you out quickly in how to do that.
Yeah, so that could become a cash flow issue for a lot of businesses, but I presume if a lot of family daycare educators um, are basically under the self-employed category, they just need to pay themselves. In that instance, they just have to wait for that payment to be received because then that gets applied to them. The next question is, I think there's a couple of questions I'll skip. We have discussed that during the presentation. The next relevant question is, how do I show my losses in my next year's tax return? Now, JobKeeper does not make any change to the way in which you show losses in your tax return. That is not quite relevant to the JobKeeper. So if your business is making a loss and you're reporting your business income and expenses in your tax return, you might have a loss. It's the same process you will continue in reporting your business income and expenses. The eligibility of JobKeeper is purely based on the criteria we have just described, either as an employer or as a self-employed business participant. The only thing is that any payment you will receive under JobKeeper would just have to be normally disclosed as your income on top of the other income you were receiving as a family daycare educator, and you will claim your normal expenses. The next question was, my individual tax returns are not up to date. Will this affect whether I can apply eligible? Now, this is a very important question and probably very relevant to a lot of attendees in this instance. And a lot of questions we have received. Some of the common features are people don't have an ABN or people have not filed their tax returns. Now, I suppose if you want to claim the JobKeeper, you will have to come forward and catch up on all your tax returns which you have not lodged. As I explained earlier, one of the criteria for the commissioner to see is that you need to have uh, disclose your income in 2018-19 tax return before 12th of March, and if not, then whether you are lodging a business activity statement, then you've made a taxable GST supply. And a lot of family day educators here could be in a category there where they don't fall in any of those criteria where they have, example as an example in this question, they haven't lodged their tax return, or they haven't for 18-19, or they've not lodged their tax return for many years. In that instance, doesn't mean that they are not eligible. They just need to catch up with their tax returns, and it is possible that they might have a lot of tax pending to be paid after they lodge their tax returns, and they might also have a lot of interest and penalties which might arise because of that. So you need to make an informed decision, and that's where you need to work with your accountant or advisor. We can help. Fortuna, of course, can help you if you want to discuss your personal circumstances, that what is the best course of action you should take in your personal situation, so that you're still be eligible to receive the JobKeeper payments. But ATO at this point is taking a lot of flexible approach. If you come forward in terms of getting your taxes up to date, and if you need any payment arrangements to pay your past tax liabilities, that can be arranged as well. So I have next question is, I have a family daycare and I'm self-employed. I work in my husband's company as well. I'm employed by that company as well. I have applied for the JobKeeper from his company. Can I get anything to help me with my own company? So the answer is no. An individual, one person can only get one single JobKeeper payment. It will be linked to their tax file number. So even if you're doing a multiple employments, or if you are employee in one company and you also are self-employed in your own business as a sole trader, you can only apply. You might be eligible under various categories, but you need to choose which category you probably will have to be registering under and be claiming under. But one individual with their tax file number would only be eligible to receive one JobKeeper payment. The next question, I'll pass it on to Steve, which is, once you register as an employer, do you need to apply for all eligible employees, or you can choose which one to apply for? Some people say it is either in or all out. I mean, I think we don't have a lot of family day educators who have multiple employees who have to make that decision. So it might not be a lot relevant, but maybe I'll quickly just cover that. If you have multiple employees, then you probably need to register for all of them if you are eligible for a JobKeeper payment, unless you don't need any one of your particular employees to continue with you, in which case you can terminate them through the normal termination process, which could be redundancy or other termination requirements. Now, the next question is, I've only been operating since November 2019. However, this is my only income and I've lost about $850 a week. I'm a single mom of 3, and this is very scary. Am I eligible for JobKeeper? Steve, there are 2 questions which are connected, so I'll read the second question as well, and if you can provide an answer. Second question says, I worked only 3 days per week in 2019 compared to 5 days in 2020, which means an increase in volume, with saying that I would still be eligible for JobKeeper. And what is the process to apply for JobKeeper? How do we go about it? So they're connected because in one case they only started operating the business in the last 12 months, and in the other instance they had increase in the income from last year, but because of this COVID, their income will decrease. So what would be their eligibility criteria?
Yeah, so this is a classic case for where we are awaiting the tax commissioner to develop the alternative or alternatives to the turnover decline test. So the first one is we're expecting to see one that covers businesses that have not been in operation for a full 12 months, and especially one that's only been in operation for a very short period. We would just be expecting them to probably let that business compare their COVID affected turnover in March, April or later to possibly even their best turnover beforehand, because they could say, well, look, I'm in a startup business, my turnover, it's growing, and maybe I'm going to have good months and bad months. So I would expect the person in that category, where she's lost $850 a week, we're assuming that is much more than 30% of what she was getting before. So we expect there's a fairly good chance that a person in that category will be able to claim JobKeeper. Now, in the second one, so someone was working 3 days in 2019, and they've increased to 5 days before Corona hit, and presumably gone back down, or they're getting much less return for their extra effort that they're putting in. Again, that's a case where you've got a good argument that it's not fair to compare your April 2020 turnover to your April 2019 turnover. So again, we're hoping that and expecting there's a good chance that the Tax Commission will develop an alternative test which allows to be taken into account the fact that your business was actually on an upward trajectory, and then COVID knocked it back by more than 30% from where it would have been on that upward trajectory.
Thanks, Steve. Then we had a few more specific questions. I mean, most of these questions are pertaining to the family daycare industry, but a few more peculiar questions, which could be more sort of individualized circumstances. The first one was, can I apply for the JobKeeper? Sorry, this one is, can I apply for JobKeeper through, I began my FDC in July 2019 and therefore have no records from 12 months prior. I suppose this is quite similar to the situation you just explained. But the only difference is that there is no records prior to have a comparison. So how would they compare the decline?
Yes, same thing. That person is going to need to wait for the Tax Commission, hopefully over the weekend or very early next week, to release this new test that says for businesses not in operation 12 months ago, they can use some month within the period within which they have been operating as the comparison, and hopefully not necessarily the first month, because as I've said several times, that could still be quite a quiet month. They might need to be fairly given the opportunity to use a later month where their turnover had grown to a better level. So hopefully, yes.
Thank you, Steve. The next question is, I'm currently closed due to illness not related to coronavirus. Therefore, no children in care, not receiving any funding money. I have a medical certificate. Am I eligible for JobKeeper? And the similar question was where I do not have a medical certificate and rest the same circumstances. Steve?
Okay, so in that case, if you satisfy the turnover decline test, it actually doesn't matter what the reason is. And as this particular case, it's got nothing to do with Corona. It doesn't matter. The rules are built on the assumption that if your turnover is down, it must be down due to Corona, and there's no questioning of that. So, yeah, if you're you've suffered an injury before Corona, and that's why you're not working, not running your business, your turnover's down, you by more than 30%, you will qualify, whether or not you have a medical certificate.
Yes, and also if you decide to close your business voluntarily because you're scared that you might catch coronavirus, so I suppose it's the same thing. You don't have to really provide the reasons why your turnover is down or why you have to close your business down. As you explained, you just need to qualify based on the turnover reduction.
I mean, the only possible question is you do need to have been, if you're claiming as a self-employed sole trader, you do need to have been actively engaged in your business as at 1 March. Now, I don't believe that they'll necessarily take a 100% strict interpretation to that. I mean, you might have been on annual leave from your business at 1 March, and I don't think that would mean that you therefore don't qualify, because what it is probably going to be interpreted in a more reasonable business sense, in the sense that, well, you would have otherwise been working actively in your business as at 1 March, except for the fact that you did some normal activity that would normally happen in the case of an active business owner, such as going on leave, although I guess not many of us get very much leave, but or you may have been sick for a while. It depends. I mean, if you're long-term invalid, then they might decide that you weren't really actively involved in a business at 1 March. But if you just say been off work for a few weeks, and that's wrecked your March to April turnover, then I would expect you would still qualify if your turnover is down by 30%.
Thanks, Steve. The next question is, with the free childcare, what this means to the family daycare educators. This actually means that parents will not pay their portion of the fees, and the government has decided it will contribute 50% of the amount they were contributing towards the daily hourly fee. Yet we are expecting to still offer or be open the same amount of hours. So in fact, we are being asked to work for less money per day. Now, is this legal? Can I reduce my hours to match the money I'm receiving? So I think it falls back into the same sort of things we've discussed earlier. If the legislation setting these terms have been passed by the government that they're going to only pay you 50%, well, it is legal if the legislation has been passed. So the best you can do is that as an industry, you need to lobby or go approach the government or go to your local MPs as combined with your scheme and all the family daycare educators that you can't operate. The announcement in the media was that they're going to make the childcare free, but the rules which have come later on, as we've been explained by the industry, is that it's free for the parents now, and they will only get 50% from the government. So uh, if it is a law, it is legal, but I suppose as an industry that needs to be approached or lobbied that this is not correct. So the next part of the question was, can I reduce my hours to match the money I'm receiving? Now the requirement is that you remain open with at least one enrollment. It does not specify the hours that you have to be open. So you get paid for the hours that you are actually providing the care. So I don't think there's any such criteria that you can reduce your hours. You'll get the income for the hours you work, but whether the government is going to, if they're paying you 50% based on the billing you were submitting earlier through your scheme, then if you reduce your hours, your gross income will be determined based on the hours and the hourly rate you charge, and you submit that, you're going to be get paid in proportion to that. So um, now, the next question was, is the money for JobKeeper paid directly to us or to the childcare service with which we are registered? So the money will be paid to the owner of the business, which applies for JobKeeper. So your scheme or the service is a separate business, and the family day educator running as a self-employed is a separate business. So they both considered as a separate business. You need to apply as an FDC educator yourself. And which is could be under the self-employed category, and your scheme could be will have to apply separately because they are an employer. Most of the schemes would be having staff and employees, so they will register under an employer category and claim the JobKeeper for their employees. So the next question has few parts. Steve, I'll read out one at a time. No GST is charged on the childcare, as it was raised earlier as well, but we lots of GST on products and services to provide our services of the childcare. The first part of the question was, I'm not registered for GST. After discussion on Facebook groups, it seems I'm missing out on a regular refund from ATR. How can I do that and want to be, how do I register for GST and how do I do this?
Yes, that's correct. If you're selling GST-free supplies, as you are in family daycare, you're still entitled to register for GST. And in fact, as Dinesh said, if by some chance you happen to be doing more than $75,000 worth of fees per year, you have to register, even though you don't actually have to pay any GST. If you're, as many I imagine would be possibly earning less than 75,000, they may register for GST, and the advantage is that they can then claim input tax credits. So if they've spent $100 on a service from another business, that has got, so they've spent $110 on a service from another business, that's got $10 worth of GST built into it. If you're not registered for GST, that $110 is costing you $110 out of pocket. But if you register for GST, then you record all your amounts that you've spent in your business and file them in your BAS, and you get back the 10% GST out of those amounts that you've spent from the government. You get a nice check within a few days or so after filing your BAS. Now, if you, the only issue, Dinesh, you may wish to come in here, if your turnover is less than $75,000 per year, your normal period for filing a BAS is once a year. So there's no opportunity, is there, Dinesh, to choose to file more frequently to get your input tax credits more often?
Yes. So, Steve, when your turnover is less than $75,000, you have no requirement to register for GST and hence not file BAS. But as you mentioned, that you will miss out on a lot of GST on all the expenses you can claim because your sales was GST free. So you have an opportunity. So a lot of businesses would, in that category, go and voluntarily register for GST so that they can claim the input credits on all the expenses and continue to get the refund. Now, the standard rule is that if you voluntarily register for GST, you will have to file your BAS only annually, so that you don't have the expense of filing BASs quarterly. But you can always change that to report on a quarterly basis, so that you can more frequently claim your GST credit. So yes, you can change the frequency from annual to quarterly.
How do they do this? That's probably more specifically within your area of expertise, Dinesh. There's some form it's in the business portal, which is now through MyGov ID, correct, where you would actually register for GST?
Yes. So you, as a business owner, either need to have your own business portal, which used to be through an OSCE. Now it's through MyGov ID, and you can operate that directly through that, or you need to use a registered tax agent or an accountant who is a registered tax agent to be able to lodge on your behalf. And then you can register through an tax agent as well, and then you can start filing your BASs through tax agent if you don't have a business portal. Now, I'll just probably add in here that in a lot of instances, we're talking about the examples here in family daycare educators who have not registered for GST. Now, you can go back and register for GST up to 4 years, but you can only go and register for generally on ABN for 12 months backdated, which means that if you don't even have an ABN, you won't be able to register for GST, but you've got 4 years of GST to lodge. You will probably have to approach the ATO to get a special exception to get an ABN registered, and then lodge your business activity statements or lodge your GST for the last 4 years. So I think that covers that question. The next question is, I'm a sole trader. What support can I request? And do I have to apply for the JobKeeper allowance, or can the service claim my JobKeeper allowance? I think we've already covered that. Both of them would be treated as a separate business. So you as a sole trader need to register separately for the JobKeeper as a business service participant and claim it for yourself, and your service will have to do that for their own employees. Now, the next question was, as an FTC operator, do I have to have a MyGov ID account to receive a JobKeeper? Every business, as I explained, will need to have a MyGov ID to interact with ATO directly, unless they're doing it with their tax agent. One of the questions was, some people are saying we need to have a GST accountant to be able to claim the JobKeeper. You don't need to have necessarily have an accountant. As we mentioned, you can have your own business portal, register with ATO, and try to lodge your own application, and you can try to lodge your own activity statements. You perhaps, if you are operating under a particular structure, you need to use a tax agent to file your tax returns for a family trust or a company. But if you're not quite sure how to do that, it would be wise to contact the accountant to be able to help you with that. Now, I think that covers most of. I'll probably touch on one more question here. Can I claim the $10,000 super release if I got JobKeeper as a family daycare educator? In short, the answer is yes. If you fall, you could be eligible. There's a separate criteria to be eligible to have an early release of your super, which is you need to make the financial hardship test. And need to show a certain decline in your income. And it could be possible that you're eligible for JobKeeper under the self-employed category, and you're also eligible for an early release of super up to $10,000. Steve, I think that we've covered most of the questions we received in advance. Now, we've got another 5 minutes or so. We'll quickly pick up a few questions which has come on the chat box. and also on the Q&A. The first question, uh, uh, the first question was just to clarify, is it correct we use a best quarter or a month to qualify for the JobKeeper? Yes, as we explained earlier, you can actually project your turnover for a month or for a quarter, and you can determine your eligibility based on that. The next question was, I was working as a casual childcare worker under the agency. Starting job in February 2020. I don't have the job anymore. So will I be eligible for JobKeeper? Steve, you want to answer that?
If you did happen to still be employed at the 1st of March and you don't have that job since then, you've lost the job after that time, and you may be able to speak to your employer about possibly getting your job back on the basis that it doesn't cost them anything and they just pay you JobKeeper. But otherwise, no, if you can't get your job back that you had at 1st of March, then you can't qualify.
Okay, so there's a few more questions. We'll try to quickly cover as much we can. The next question is, if I started in January 2019, but changed schemes in July 2019, what would I still be able to get the JobKeeper, as it's still my business and have been open over the year? Or would I need to wait until July 2020 to be able to be with the same scheme the 1 year? Any help would be greatly appreciated.
The scheme shouldn't make any difference. You're still conducting the same business, regardless of which scheme you are with. So I wouldn't see that as affecting your turnover in any way, and it certainly would not require you to wait until July.
Okay, thanks, Steve. The next question is, I think that's pretty much on this. I started in January. Okay, I think we've covered those. I think we're running out of time. I would just like to quickly mention that we've tried to cover as many questions as we could, as we've received in advance and also through the chat box just now. There's a lot of cases here where each individual circumstances are quite different. A lot of people are not sure whether because they have not have an existing ABN, or they're not registered for GST, or they're not filed their tax returns. If someone wants to discuss individually their personal circumstances to see how they can be eligible and they don't miss out, you have an option to have a consultation with myself or Steve. We are offering a special priced consultation, which is quite at our reduced prices from our normal consultation charges. You have an option to book a meeting with us for $199 ex GST for a 1-hour consultation, and we can discuss with you in your personal circumstances that what needs to be done practically so that you can apply for that scheme. Also, I'd like to mention that the JobKeeper payment application process starts from Monday, the 20th of April. And to be able to claim for the April month, because the scheme starts from 30th of March, you need to register before 28th of April. So you technically have only 1 week if you want to claim from the 30th of March onwards. And thereafter, if you miss that, you have an option in every fortnight to be able to register, but you will only get a payment from that fortnight onward. So if you miss the 28th of April deadline, you would only be able to register in the next fortnight if you think you are eligible based on the normal monthly or quarterly eligibility criteria. So if you really you think you're eligible and you don't want to miss out for the April month payments, you need to act quite quickly. We have some special packages for helping you with the registration process. For those who are employer category, having employees, there's pricing on the screen there. For the sole traders, a lot of people who are in FTC educator categories who are running they're self-employed business, we can help you with the whole registration process with a fixed fee. All of these prices are quite discounted rates from our normal prices. We are offering another special just for all the attendees or the participants today who are registering. We'll be happy to offer another 10% discount if they want to reach out to us in the next over this weekend. I'll encourage most of you to please follow us on our Facebook or LinkedIn page for Fortuna Advisory Group. We are releasing the live information as we get from ATO or Treasury, not only regarding the JobKeeper, but we're trying to provide that information, a lot of resources and tools, which we continuously update on our website and socials. If you have any other question or need any support or need to book a meeting, please reach out to us on support@fortunaadvisors.com.au, or we've got our phone number, or all the other details are available on our website as well. I will quickly pop in our meeting link on the chat box. If someone wants to book a meeting, they can just click on the link. I'll put it on the chat box. Anyone can click on that link and they can book a meeting with us. And we are happy to offer the concessional charges we have just mentioned on the slide I've just shown you. So we wish you all the best. Hope we been able to answer as many of your questions within the limited time we had, and hope you have received value from this webinar. I wish you all the best and hope all of us can come out on the other side of this with a much stronger a business, and we are able to recover from this soon. So all the best. Thank you, and please stay tuned.
Yes, thank you all for attending, and all the best in getting your business back up and running as swiftly as possible.
Thank you.